Welcome out to BluSky TV. This is Coach Matt. I'm in the technical lab here today, and I got to mute my YouTube or I'm getting an echo there. But welcome back out. And as we start today at BluSky for Power Hour in the lab, we're looking at a little bit of a reversal candidate here, in my opinion. Now, I tried a little bit of an aggressive reversal earlier in the session and got stopped out on a cheap risk trade. But I do want to talk about potential reversals here today as we kind of dial in the technical lab here, and obviously as we yes I did. I tried to take a stab right here as we were getting. You see how we broke the 75 and it was trying to fake out here? That's me right there. That's me getting stopped out right there. And so, yes, I did attempt to take that long on the reversal, but I actually like it a lot more right this very second as you're starting to see the market kind of press up against that 7,500 level. And the market today has obviously been very consistent on the downside. And this is the first chance that the bulls have really kind of turned it around here. And that's why I was a little bit interested in the 7,500 retest here, because any reversal, any trade starts with a trade idea. And that trade idea typically starts at a, hey, I love the level type situation here. I love that 7,500 level. I love, the potential of a reversal at that 7,500 level. And so it starts with that, but it doesn't conclude with that. That's not the end story of a reversal, although this one's starting to brew pretty good, quite frankly. And so I want to talk a little bit about things that we like to see in reversal situations. They happen a lot as a day trader, obviously, looking at trying to pick up the low point, trying to get that back up into VWAP, for example, creating a wick on the daily chart, all of that jazz. And so I want to start there in terms of what are some of the things that we like to see in reversal analysis. The first thing is really kind of your level, having an opinion at that 7,500 level. What's up, Ace? Good to see you, brother. I got a lot of AI on my brain right now, quite frankly, Ace. Seeing the semiconductors pull back, which is obviously kind of the catalyst of the volatility here today. I kind of got the AI trade all up in my brain here today. But coming back to the kind of the technical condition here, you see this little situation where you got a double bottom situation at support, and you're working into what's called the double top. Now the bulls are obviously stepping up here. You got a slight increase in volume down there as you push into that overhead resistance. Now the first thing that I want to talk about here is momentum. Momentum is absolutely everything. And you can read momentum in a variety of different ways in the market. You can read it from an indicator perspective, the size of the candlesticks, the size of the wicks. There's a lot of different ways to read momentum. But when it comes to high quality reversal situations, the first concept you really want to kind of understand is the shift in momentum, because in a trend is dominated by the primary trend, which is in this situation a short-term downtrend on the intraday side of the equation. So bears are dominating in those situations. You look at MACD here, MACD being a momentum indicator. Let me try to get that up a little bit. Not playing around. There we go. And let's get that one up there. So you look at there's RSI and there's MACD right there. Let's look at MACD really quickly. Actually, I'm just going to come over to TOS to do this. Give me a second. All right, so let's come back into the ES here. And let's go to that 5-minute chart. All right, so you look at the situation here on the momentum side of the equation. And when you're coming into MACD, look at MACD. MACD is a momentum indicator. It helps us understand the momentum side of the equation. It's a secondary indicator that helps us understand who has total control. And when you talk about MACD can be very misunderstood from a momentum perspective because do you see how MACD on the histogram? So here's your signal line and your percent D line. Here's your MACD histogram, which shows the vertical distance on the momentum between the two moving averages. And so as the histogram crosses under zero, right after that positive cash open, you see the kind of the momentum shift here, and you see MACD kind of cross as the same time we're giving up that 9 EMA right there. Once you give up that 9 EMA, and once the histogram crosses into the zero underneath the zero territory, that's at that point where the bears have momentum. And as long as that histogram is red, bears have momentum. And that's the misread a lot of people have on MACD is they see, okay, MACD showing acceleration to the downside. That's bears increasing momentum. And then the flaw is when MACD starts coming back up, people have a tendency to believe that that's bulls that are doing that. And it's not. That's bears. Every time MACD goes down, that's bears pushing the momentum to the downside. Every time MACD comes back up, that's bears typically tapping on the brakes and slowing the momentum. So it's constantly a bearish momentum situation. It's bears pushing the momentum down. It's bears tapping on the brakes, alleviating the momentum back up to the top side. But it's not a bullish indication when MACD just simply starts going back up to the zero barrier. When bulls have momentum, it's when you cross back up above zero. And when that blue line crosses over the yellow line here, that's when you, oh, what's up, buddy? That's my little dude wanting to come in and say hello. And they, they didn't, my wife did not allow him to. And so he's kind of having a little bit of a fit there. He's a cute little dude. I wish he could come in and give the analysis, quite frankly. Yeah, it's he came running in here like a rocket ship. Like he was running in. I'm gonna get onto Uncle Matt's lap and we're gonna look at some charts here. He got snuck out though. And so here's where the bulls really start shifting momentum. And that's when I was like, all right, can we catch something early above that 7,500 level? And so I was doing what's called front running. I was front running the reversal. And whenever you're front running the reversal because you have an opinion at the level, because the momentum is shifting and you're trying to maximize your return versus your risk ratio, you're obviously going to give up a little bit of probability. So don't be surprised if you're aggressively trying to trade a reversal when you're still going against the overall trend by front running. But that is the scenario where the bulls finally show some degree of momentum shift is as you can see as the MACD crosses the signal line, and then you see the expansion of that momentum. And so if you're looking at this through fresh eyes, you're saying, okay, now the momentum is now on the bull side. I'm talking obviously on a very short-term side of the equation, but now the momentum is firmly on the bulls. And so now I'm looking at secondary patterns on the bull side of the equation. A little bit of a flag back down here, a little bit of a high base to structure the trade. The only thing I don't want to do, because I wish I would have just been aggressive above the 9 EMA the same way I was here, I wasn't. And so now I'm going to be a little bit patient because I don't want to chase it too far above that 9 EMA. And so the bulls now have reasserted control from a momentum perspective. But momentum, like I said, there's a lot of different ways to read momentum. Big green candles are momentum based. So this candle right here is bigger than this candle right here. That's a sign of increasing bullish momentum. You see that obviously through the histogram as the bars on the histogram are getting bigger, showing you the bulls have a little bit more momentum. You have the separation of the signal line, which is also showing you have bulls have momentum. And so bulls have the momentum. Doesn't mean you have a trade yet, but they certainly do have the momentum. And so I'd be looking at it through that lens. Now, coming out to the 15-minute chart, does the 15-minute chart confirm that yet? No, the 15-minute chart is just a bearish retracement with a slight shift in momentum, which means that you are counter trending and you should do it with a partial position because you don't have an edge on multiple time frames as of yet. But coming out to the bigger picture, I want to talk continually about momentum because momentum, you can see it when it happens on MACD, But if you understand how momentum happens within a trend, you can start to understand this story before MACD even starts to turn around. Remember, these secondary indicators like MACD, RSI, moving averages, they're all lagging the price. If I want to get in front of the price, I need to understand how these indicators work. And so, one of the things that is very important from a momentum perspective is having an understanding of how momentum and definitely divergence, Ace, is a very big bullish sign. And so, for example, on MACD, what would divergence look like here? Divergence would look like this. If MACD comes down and tests the low here at 74.83, but doesn't break the low, and MACD comes down here and establishes a higher level of support. And so there at that point, you have a higher level of support in MACD, whereas you have an equal level of support or maybe even a fake out situation. That divergence is one of the things I'm kind of waiting on here, to be perfectly honest, because that little bit of a pullback is going to create some divergence there. And on RSI, which again, divergence being a positive catalyst, this would be a bullish divergence example. And you're obviously going to see bullish divergence here on RSI as well. RSI is already up the 50 level, which means you've already had a pretty substantial shift on RSI already, despite the fact that you're only 18 points above the low price of the day so far. RSI is like, no, 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 no. There was shifting momentum even before that upward movement in price, because RSI measures the magnitude of the downward movements in price versus the upward movements in price. And so over the last 14 bars, despite the fact that you've only had 2 momentum candles here over the last 14 bars, you've already seen that shift. And so you've already seen that shift, which means RSI is absolutely going to diverge on any pullback. Right now, it's just converging, it's just confirming the move here. But any pullback, especially if it comes into the low price, you will see a divergence situation as well. But the topic that I really want to anchor on here is not just divergence and having an understanding of the secondary indicators to help us understand those momentum shifts, but it's really about understanding when the momentum is going to shift. That you have that understanding that we should see it, should start to see a shift in momentum even before the indicators tell us that. And that's when you're reading the natural price action and specifically how momentum works within a general trend. And so let's take a step back here for a second and let's just talk about momentum from a general trending perspective. By the way, I kind of like this right here. But when you look at momentum from a trend, we all know how trending analysis works. It's a series of higher highs and higher lows, higher highs and higher lows. Well, the relationship between those higher highs and those higher lows is how you read momentum. And so when you're looking at it through the lens of a trend, you can look at it through 2 lenses: the vertical distance between 2 levels of resistance. And if you would go up from 75.70 to 75.90, and then you go from 75.90 to 7600, so you expand 20 points on a breakout, then you expand 10 points on a breakout, and you have a pivot formation, that's a sign that the market is slowing down. That's a sign that the market is shifting its momentum. Even if MACD has not registered that yet, even if RSI has not registered that. When you have a breakout that starts getting slowing down as the higher it goes, you start to see that through a momentum lens. As the market is coming down and you're breaking support, here's your first move to the downside. Here's your first consolidation pattern. You go from 75.90 down to 75.30. You move 60 points in that move. And then you go from the breakdown right there at the 75.30 level, and you walk all the way down to this breakdown right here at the 75. We'll just make it easy, about 74.85. That moves right there about 45 points. So the first leg goes 60, the second leg goes 45. And then all of a sudden, you got a scenario where you go from this breakdown to 85 to 80. a 5-point shift. And so you have these pivots that are slowing down. And as these pivots are slowing down, it's the bulls starting to step in, it's the bears locking in profit, and that's what's leading to that shift in MACD. And so when you come back out to MACD, you can look at the same thing through the lens of RSI. But when you come back out to that same lens here, well, the first sign of slowing momentum was on the 45-point move to the downside here. You had a slight shift through that. And then on this next one, where you have that scenario where the true reversal is starting to take hold, you have a 5-point shift from resistance from support to support. And so when you're looking at those breakdown scenarios, a breakdown is a momentum pattern. And so when you break down, you expect momentum to occur. Bears are going to jump on the shorts, bulls are going to get stopped out, creates a momentum condition to the downside. Well, as that pattern starts to shift, we need to shift with it. And so if you're a bear running down here, well, obviously, as you see the momentum shift, you want to start aggressively trailing that stop loss down, because the most likely scenario is you are going to get stopped out at that point, and you should probably stop chasing the price to the downside once you see that momentum shift as well. And so momentum shifts can be very, very important. So the first one is looking at it through the lens of your indicators. The second one is to understand how those indicators work from a breakout perspective. And so you move 60 points, and then you move 45 points, and then you move 5 points. You're seeing that momentum shift over time. The most powerful way to look at it is through the lens of what is called potential average yield, otherwise known as pay ranges. Now, what pay ranges are is it's the assessment of the wave within a trend. And so instead of looking at how it moved from a breakdown to the next support level, breakdown to the next support level, breakdown to the next support level, you look at it through the lens of Elliott wave theory, and that's counting your waves. And so you have wave one, then you have wave two, then you have wave three. And so from your wave perspective, you go from 75.95 down to 75.25. So you move right around that. Well, that's about 70 points there. And then you move from 45 down to the low point at 85. That's about 60 points there. So it goes from 75 to 65. And then it goes from 7,500 down to 7,480, 20 points. And so you go 75, then you go 60, then you go 25. Well, what's that story trying to tell us technically? It's trying to tell us that something is changing, that the momentum is changing. And as the momentum changes, I need to make some adjustments with that as well. And so when you're looking at it through the intraday lens, you can certainly see that. But let's take a step back and let's look at one of the most popular trades in the market right now. And the most popular trade in the market, the most heavy popular trade in the entire market, is the semiconductor landscape. Undeniably, it's the semiconductors. The semiconductors are what's leading to a lot of the price movement over the course of the last 6 months. The semiconductors has been leading this conversation in general for years now, and I would say the semiconductors have been the leader in the market, not just for the last year, 3 years during the AI landscape, 6 years after the pandemic. You go back in time. In fact, if you say, Matt, every single year you have to pick the number one sector in the market, I'm going to pick technology every single year, because 80% of the time technology outperforms because it's the growth areas of the market. Well, when you're looking at semiconductors, I've gotten a lot of questions recently on the AI trade and semiconductors in general. And when like, for example, should I buy it? Should I buy it? And my answer in the last month, guys, what has it been? When somebody, one of my students, has came up to me and said, "Is it time to buy your favorite semiconductor company?" What has my answer been to every one of my students who has asked me that question in the last month? My answer has been no, not yet. Be patient. Wait, you're going to get a better price. Why? Because the momentum story is undeniable here, team. Undeniable. You see a massive momentum surge coming out of the last earnings environment. You then see a slower momentum surge. Then you see a slower momentum surge. You see that momentum story over time. And not only are you seeing a momentum story over time shift here, which is telling you that the buyers in this heavily crowded trade is starting to get a little bit too crowded. Well, what does that typically lead to? That typically leads to a reversal, which we're seeing play out, and then ultimately a correction or a bullish retracement, which is typically on the weekly chart, which we're now at the 9 weekly, which you can see momentum shift here as well. And so, Ace, that's really kind of the conclusion of that SMH story in the last month. It's not that semiconductors aren't fantastic. Semiconductors are amazing. I love semiconductors. But it once again is undeniable that we have seen momentum shifts already in the market from a trending perspective. And then when you look at your indicators, well, what's been going on? Despite the upward movement in price, despite this leg up in the market, what did we see? We saw divergence here. And so you had a divergent situation even when the market was going up and trying to break out and trying to reestablish momentum, it just couldn't do it because of the constant momentum shifts over time. And so you see that divergent situation here where right here you're breaking out in a slowing momentum environment, you're breaking out, and yet you are diverging across every indicator. You're seeing bearish divergence. You see a higher high, but you see a lower high on RSI. You see a higher high on SMH. You see a lower high on MACD. Those are very big warning signs in reversal analysis. And so, yeah, I just give me one more leg here, Ace. That's all I want. I just want one more leg. And I say that as a guy who likes to invest in the semiconductors area of the market. Lam Research, one of my favorite companies out there. Am I going to dump Lam Research because this beautiful uptrend, because we're seeing shifting volatility and slowing momentum? No, I'm going to be patient. I'm going to look to add as it gets down into support. Is when you're looking at your memory companies out there. One of the biggest one of the most popular companies in the entire market, one of the most heavily traded areas of the market is Micron and SanDisk and WDC and Seagate. For big time memory companies out there, not all of them simultaneously. And I would put KLAC there, but I would put KLAC there a little bit differently than say I wouldn't say KLAC is the exact same as Micron. I wouldn't say they're the exact same because they're more in process control. And KLAC has a near monopoly in process control, Ace. No doubt about that. KLAC's got 65% gross margins. It is a really good company, and I like it a lot. But I would say KLAC is a little bit different than your Micron or your Seagate, and even Seagate, for example, STX is different from Micron. So the pure memory play out there is Micron, and then you have different components within that. But every one of those companies have massive revenue handles right now, massive gross margins right now. Like nobody competes on the gross margin the same way Nvidia does, but 65% gross margin on KLAC is really, really, really pretty good. And so, by the way, Ace, I've been doing quite a bit of research on the AI side of the equation today. That's why that's all in my head today, is because I spent a good 2-3 hours this morning just kind of researching the AI landscape, because the AI landscape's pulling back here, team. And people that might see that through a negative lens, I see that through resetting this trend. I like the pullback here. I want to get a little bit deeper in this pullback here. I mean, once the market pulls back, the deeper we go, the better opportunity we have, in my opinion. And so it's if the market just recovers from here, all of a sudden it's going to be like, what are you going to do? You're going to recover in a slowing momentum environment. The only thing that's going to do is shift the volatility and make everything even more difficult. Rip the band-aid off. Let's get down a little bit, right? Let's get down there a little bit. And so, but again, my general point is the momentum shifts you see, they're not, you can't discount them. You cannot discount a momentum shift against a late stage trend, because how many legs? I want to pop quiz team. I want to see who can guess this. How many legs do we get in a standard trend according to Elliott wave theory? How many waves do we get in a standard trend in Elliott wave theory? Momo is everything. Like, number one thing we got to learn how to read is trends, patterns, support, resistance, and every single aspect of that conversation. Momentum is absolutely everything. We get 3 up and 2 down, right? Gabber, we get 3 up and 2 down, 5 ways total. We get 3 up, 2 down in a bullish uptrend. We get 3 down, 2 up in a bullish up or in a bearish downtrend. All right. Now, typically speaking, wave 3 is supposed to be the longest of the waves. That's not here. Okay. Oh, yeah. No, I got it. Gabber, I was with you. I was with you. Like, oh, yeah, I totally got the 3 up, 2 down. Why? Because at the end, there's 8. At the end, there's 8. Ace is right. You got 5 in the trend, and then you got 3 in the correction. That's the 8 is the proper answer. Within the ultimate trend, you have 5. And so it goes wave 1, wave 2, wave 3, wave 4, wave 5. Wave 5 is typically where we see the slowing momentum. And then after wave 5, we see typically some degree ABC, double bottom, slow its momentum. And then let's pick that bad boy up yet again. And so understanding that technical story helps you understand how to navigate these things pretty well, honestly. And so let's count some waves here, team, and then we'll come back down into the intraday side. All right. Wave 1, 2, 3, 4, 5, shifty volatility, A, B, C. Stop clicking the button twice, Justice. Double bottom, and let's rock. And so the when you understand the technical saga, it really tells you what you need to do, what you need to be patient for, and what you need to wait on. When you look at the market here today on the intraday side of the equation, by the way, not surprised we're seeing that reversal play out here. But when you look at the market here today from that same conversation here, well, let's count the waves. 1, consolidation. 2, 3, pullback. 4, slowing momentum. 5, 1, 2, 3. And now it's a matter of, does this want a trend, or are we just looking at a little bit of a technical situation back to the downside? And so you have that permeable. Yeah, I'm definitely a permeable in general. But in the semiconductors, memory, yeah, you can't get me off that one. Yeah, you can't get me off that one. I would have to see something pretty dramatically negative on the fundamental side of the equation to get me off that permeable status in the semiconductors and in some aspects of the other areas of the market like memory. Software, I'm definitely not a permeable in software, but I do like to pick reversal candidates in software as well. But I'm not a permeable in software. Software has a little bit of a different conversation, but in the semiconductors, memory, and anything that has anything to do with the AI landscape, like even on the energy side of the equation, GEV, for example, VST, for example, I would say are, permeable type scenarios. Um, Micron's PEG ratio says it's going there. Micron's PE ratio gives me a little bit of burn, but I would definitely say Micron's PEG ratio, which takes into account the valuation, and the forward P ratio is not bad on Micron. But I would say it's definitely has the ability to get up there. Yeah, no doubt about that. I will say this, Ace. I want to see splits. I want to see SanDisk split. I want to see Micron split. There's a couple other stocks I'd love to. Applied Material needs to split at this point as well. But again, coming back to the technical saga here, team, and then we'll kind of just spend the rest of the time on the intraday side of the equation. When you're looking for a high quality reversal, on any time frame. It really starts with where's your level, because these reversals don't have a tendency to happen out of nowhere. They have a tendency to find a support level that is typically some degree of major support level. Number two, at that support level, you want to see the slowing momentum conversation. Whether it's through the indicators or through the natural lens of price. Once again, potential average yield. Pay ranges is the look at the actual price movement within the wave counts, very similar to Wyckoff's theory of pricing in behavioral analysis and Gann's theory of pricing in technical behavioral analysis. That's what potential average yield is. It's the study of how far something will run before it gets tired. That's potential average yield. So if think about it like this. Let's go with Jonathan. Jonathan and Ace. So I'm gonna have you guys. Jonathan and Ace. If you were to go out and run a mile as fast as you can, would you get tired? Really simple question. If you went outside right now in the hot sun and you ran a mile as fast as you can, would you get tired? Yes, I would too. I would too. Not judging. I need to work on that as well. All right. So we'd get tired. But if I asked an Olympic sprinter if they could run a mile, would they get tired to the same way we would? No. There's different behavioral analysis. And the same thing happens with yield and potential average yield and behavioral analysis within technical analysis. Markets are driven through us traders who trade patterns based on probability, based on average price movements over time. And if a market tells me I can run 60 points, it doesn't do me any justice to say, well, I'm going to say this time because I'm involved, it's going to move 75 points. Markets have muscle memory on a yield perspective. And so potential average yield is a really powerful secondary indicator in helping you understand that momentum condition. But if that conversation is confusing, you could always look at the breakout analysis, because I do find it to be a little bit difficult for newer traders to accurately identify where the end of a wave is within Elliott wave, whether you're talking a daily chart, weekly chart, monthly chart, 5-minute chart, 15-minute chart, 30-minute chart. I do find it to be a little bit difficult for newer traders to accurately identify the backdrop of where a wave ends versus where a wave starts. But you don't have to be the expert Elliott wave Fibonacci potential average yield technician to be able to do that. You can see it from a visual perspective. You can look at breakout analysis from where it breaks to where it goes next. That is also that sign of momentum shifting. And then obviously for the new traders and even for the veteran traders, having RSI and MACD and these secondary indicators help you understand the story of price is also very, very, very powerful as well. And so today I wanted to spend some time talking about momentum shifts, because when I was, coming into the BluSky TV today, and what conversation I wanted to talk about, I always want to talk about something in the lab that is relevant to the current pricing that we're dealing with today. And when I got done with my early morning session, and I went through all my routines and I did everything I had to do in the morning session, this is kind of where we were looking at coming into the into power hour and into the conclusion of the market today, and we were starting to see that momentum shift. And so I started thinking, okay, this thing could be a pretty decent reversal here. We're starting to see momentum shift a little bit. So let's be a little bit patient, but let's have that conversation today. And when you're talking about momentum, like I said, there's a lot of different ways to read momentum. I hope that this conversation today had gave you more ammunition in the arsenal to help you understand that momentum shift. And if you love BluSky TV, you love the lab, you love these technical conversations, obviously hit that nice little like button to help us out with Google algorithms. With that said, team, that's my topic for today. If you have any questions on absolutely anything today, please go ahead, shoot. I'm going to be hanging out the rest of the day. I believe Coach Becky's going to be joining me in about, we'll take a break here in about 15 minutes and reset coming into Power Hour. But Coach Becky will be joining me to help me navigate the final conclusion of the day. Couple thoughts outside of our conversation here today. A couple thoughts just on the environment here today. We got labor market news here today, team. And one of the things that kind of people struggle with sometimes is, why does the market go up on negative economic reports? Because we certainly got one of those negative economic reports here today, team, with the labor market news here today. And one of the biggest problems with the market in just recent history is basically the environment of economic analysis improving and inflation going up. That's a real bad 1-2 punch for the Fed, who wants to adjust interest rates and honestly is begging for an environment. My read on the Fed, they're begging for an environment that they can justify getting off this path where they're anticipating 3 interest rate adjustments by the end of the year. I said it on Fed Day. I said it the day after Fed Day. I'll say it here today. I do not believe we're getting 3 interest rate hikes by the end of the year. I think we might get 1, hypothetically 2, but I don't think we're sniffing 3. And here's the reason. I have not believed that the labor market is strong. I do not believe that. I do not believe that. And secondarily, I also believe the oil shock is also going to help out a little bit as well. We should see an 8% reduction in gasoline prices month over month. That's going to alleviate the PPI report. You're also going to see a scenario where that has a downstream impact on the inflationary side of the equation. But the point is this: we had a 57K job report here today against an expectation of 114. You also had negative revisions to the last 2 months of jobs numbers here today as well. And so you had a big time miss on the jobs report here today. You also had negative revisions to the downside. And so the labor market showed weakness here today. And yet, when that labor market reported its numbers here today, again, look at the timestamp here at 5:30 my time. Well, that's right here, team. 5:30. Here's the labor market report, and here's an upward movement in price. So why were the algorithms buying a negative report? Like, and I'm serious, team, because that's not human beings that did that. That was mostly algorithms. Why were the algos programmed to buy on a negative report today? Like, I want you to think about that, because the algorithms were literally programmed to buy on a negative report. We would have sold aggressively on a beat, guys. I guarantee you, we would have sold extremely aggressively on a beat. So I want you to think about that. The question, once again, is, why did the market algorithms, why were they programmed to buy on a negative report? Let's watch the price action play out here. Farm liquidity? Maybe. Maybe. I think that was more after the cash open today. Like, I definitely agree with you post cash open. Like, yes, absolutely. Liquidity hunt, stop hunt, semiconductors sold off. Woji, 1000% accurate. 1000% accurate, team. It's on the path of policy. The number one thing the market never wants to fight is the Fed. The number one thing I don't want to fight in the market is the Fed. I would rather fight bears momentum as a perma bull than fight the path of policy. And so when you look at the Fed fund rate from a CME projection perspective, let's just kind of look at that very quickly here. When you look at the interest rate projections, team, We had a negative report here today. Market went up on the report. Why? Because in the July expectation, yesterday, 71% of economists polled were expecting no interest rate adjustment. 71%, no interest rate adjustment. Today, after labor, that's 80% no adjustment. So there was a 70-30 rule going into yesterday on whether or not we were going to get a rate hike next month. Now, more people expect no rate hike to exist next month. You come out to September, yesterday, there was and the current rate is right here. Yesterday, there was a 35% rate probability in September to have the exact same monetary condition as we have today. Today, that number is 45%. You go out to December, which is where the 3 interest rate adjustments were expected after we got the Fed meeting from a couple weeks ago. So a couple weeks ago and yesterday were all very similar here. Well, yesterday there was 16% of economists polled were expecting no rate hikes by the end of the year. Now that's 21%. 39% expected one hike by the end of the year. Now that's 41%. Yesterday, there was 54% of the economists polled, 54, 55 of the economists polled were expecting no interest rate hikes or one adjustment. So either 0 or 1 by the end of the year. Today, that number is 62%. And so the most radical exposures when you go out to December is people that were expecting 3 or more interest rate hikes. And as of yesterday, that number was around 41% of the entire market was expecting that. Now it's around 35%. And so when you're looking at an environment, it's called bad news is good news, or good news is bad news. How many of you have ever heard of that phrase before? Bad news is good news, and good news is bad news. What bad news is good news means is negative economic data gets the market what they really want. And what they really want is free money. That's what they really want. The market generally, yeah, they care about earnings, they care about data, they care about geopolitics, but the number one thing they really care about is free money. And as you start it, and if they don't have to fight that interest rate adjustment, they can feel a lot more comfortable pushing into the middle of the table because they don't have to fight the Fed. The number one reason why the market is up over the last 16 years is the M2 rate. That's the number one. And Dan, you're hitting the nail on the head. You're hitting the nail on the head there. It's the M2 rate, which goes to the borrowing cost. If the M2 rate goes up, markets go up. If the M2 rate goes down, the markets either stagnate or correct. And it's been the case ever since 2019. This is not a new conversation. This is actually a very old conversation. And so that's what's happening. And when you see that, Ace, thank you for bringing up the dollar index here, because when you see that, guys, and I'm fine M1, M2, like they're similar. I mean, you can even just say the balance sheet, you know what I mean? If the Fed balance sheet is going up, markets are going up. If balance sheet is coming down, markets are coming down type thing. Well, you brought up the dollar, and I'm glad you did, because all of this is seen through the dollar analysis. And so after the Fed guys, one of the reasons we're dealing with the correction in kind of semis and NASDAQ and we've lost momentum and all of that. Well, yeah, we can talk about the fundamental condition of the Fed, or you can talk about how it is impacted in the dollar. Because there's 2 primary reasons why currencies go up and down. The number one reason a currency goes up is based on economic value. If the economy is strong, currency is going to go up. If the economy is weak, currency is going to go down. If the economy is strong, people have faith in the currency. If the economy is weak, people don't have faith in the currency. If there's an expectation, the second reason is Fed policy. If there's an expectation of the Fed increasing rates, the dollar has to go up because of the carry trade. People are getting paid more money to own the dollar, and so they get paid a higher carry. That has to go up. And I've been saying recently that in the last, 2, 3, 4 weeks, that we don't want to fight this thing. And I'm not just talking as a day trader, guys. I'm talking as other forms of trading as well. But we don't want to fight the dollar because the dollar is the number one asset and it will cap out performance. I'm willing to bet you guys have heard me say that before. That as long as the dollar's trending in the top side, it will cap out performance. There's no doubt about that. Markets will not be open-ended if the dollar is pumping. And so, as you can see here today, what are we seeing shift here? Negative economic report brings down the interest rate, and all of a sudden we violated that very important 9 EMA. Now, we're obviously seeing a pullback start to take fold in the dollar index. And I think that's a positive thing going into the market, going into next week. In general, though, this line right here, this 105 line or 150-cent line, that's not to be messed with, team. That is a rock solid weekly resistance level. And so even though the dollar's showing a little bit of relative weakness today, commodities relatively strong here today. Even though that's the case, we're still seeing dollar trends still above dollar's ultimate support level. And we really haven't seen a shift in momentum yet either. Remember that momentum conversation. You go from resistance to resistance to resistance. Well, what is this? From this level of resistance to that's about 52 cents. From this level of resistance to that one, it's $1.60. That's increasing momentum. And so you have increasing momentum, and now you have shifting volatility. That's really, really difficult, quite frankly, in terms of exactly what's going to transpire here on the dollar. And so we're seeing the first weakness in the dollar, but we need to see more. And so it's a good start, quite frankly. But if the market's going to pump, if semis are gonna confirm a pullback, the cyclicals are going to continue to pump, and we get a general bid everything market, it's not going to be with the dollar above $100.50. It's most likely going to be underneath that level to where we're not fighting the dollar in that. Oh yeah, if you Dan, if there's anything you need to know about currency, it's that carry trade. And if it's anything about the carry trade, you have to talk about Japan. You have to talk about Japan because they're the ones who created modern monetary theory. They're the ones who first unleashed modern monetary theory. They're the ones who influenced our central bank, thank you, Ben Bernanke, on accepting and adopting modern monetary theory. And they are to blame for the rise of all balance sheets around the world, debt to GDP equations going into the 100% territory, because the Fed and the powers that be that create these economic philosophies in the laboratory do not understand how real people and real economics work. And so, and that's not to throw too much shade on the Bank of Japan. They were kind of stuck between a rock and a hard place. An aging population with a lack of growth. I get it, but in my opinion, it was a historical mistake. And one of the reasons why we see how people treat money today. Well, let me just ask you guys that question. Do people treat the utilization of money today differently than they did 20 years ago? Like, do they treat money the exact same today as we did 20 years ago? Because the answer is no. We're much looser with money today. We're much more aggressive in how we utilize money today, and we're much more willing to use debt and everything. It's just things have changed. So why has that changed? Did we people change? Did our DNA change? Our DNA didn't change, team. That's not what changed. Human nature didn't change. What changed? What changed was the monetary environment changed. That's what changed. And the downstream impact of bailing out those banks in 2008 and embracing quantitative easing as long as we did, and zero interest rate policy as long as we did, it didn't just change the way the banks worked, it changed how consumers work within that entire economic system. And now we're to the point where we're 100% GDP to debt ratio, or debt to GDP ratio. We haven't been that way since World War II, quite frankly. And quite frankly, we've been going through good times in the last 20 years, and we have not been that at that point. We created a desire for currency that has just never existed in the DNA of the American consumer. And so like these fundamental shifts, guys, these fundamental shifts, like when the Bank of Japan made that decision in 2001 to embrace modern monetary theory, and the US to adopt it in 2008, they had massive negative consequences in how all of us humans treat the utilization of currency over the course of the last 15 years. I'll get off my soapbox, but I do like this conversation. Yes, Gabbard. They used to have money, now they have credit cards. This is true, and yes, that's also what we promise to do, Ace, in all of these scenarios. Anytime we go through negative economic data, the powers that be are going to bail out the corporations, and it's kind of how it works. I don't like it, but it's kind of how it works. So yeah, that's right on my head. I like that. Couple statements, questions here. Can AI save the debt explosion? You know, that's actually a question I've oh, Dan, don't get me started on that one. I I get so furious when we try to have the conversation over who's to blame. What politician should we blame for the massive impact of inflation post-pandemic? Should we blame Trump for the initial $2,000 helicopter checks? Should we blame the shutting down of the economy to create an elevated inflation and a lack of supply where you had demand go through the roof? Or should we blame, the Biden for the second go around of monetary stimulus in 2021? Or maybe just hypothetically, we should point the finger at Jay Powell and the Fed, who made the historical mistake on transitory. Or maybe we should have ammunition for all of them, since for 6 consecutive years we've had to deal with elevated inflation, and now it's led to an affordability crisis that 80% of American consumers are now paycheck to paycheck because they haven't seen wage growth of 45% in the last 6 years. These blame them all. Like, blame them all. Don't allow us to get dialed into the political game. This is I got ammunition for all of them. Like, all of them. You want to rain helicopter checks? It's only been for 5,000 years we knew that would spark inflation. Like, there's data to suggest that if you rain helicopter checks, velocity of money increases at a level that it never has. Whereas if you create economic value, that same money goes through the system. Like, yeah, helicopter checks, increase inflation. Monetary stimulus, increase in inflation. And then you had the central bank pump $2 trillion into the system. So when we were dealing with 9.5% CPI report, which actually was around 17%, quite frankly, well, that wasn't just one dude. That took an entire financial institution to be able to do that type of number. And then they left that onto the shoulders of the consumer to deal with it, and then just try to gaslight the consumer on, oh no, the economy's doing really good, guys. Wage growth is doing fantastic. You really? Wage growth in the American consumer is doing really good. Really? Do you want to discount the $500 million bonus checks that AI executives get in terms of just getting hired on to build out an AI platform? I'm sure that might be increasing the 3.4% of wage growth right now. And so yeah, we can debate this and talk about this till the cows come home. But by the way, we've been done with the technical lab for about 15 minutes. We're just having that conversation on the economic analysis. But Ace, I'm going to tell you right now, I appreciate Ace more than anything because Ace knows how to trigger me. And I appreciate that because I do, like, in my soul, I need a little bit of a soapbox every now and then. So from me to you, team, I appreciate the soapbox. I appreciate that conversation a lot. But in general, guys, remember the number one conversation we had in the lab today: understanding momentum within trends. Understanding momentum within trends. I love that conversation. I hope you guys got a lot of value out of it as well. And then I hope you enjoyed our little soapbox we were having between the team here today. So I appreciate that, guys. I am going to take a moment here to reset, bring in Coach Becky, and we'll be back here in about, I'd say, 2 to 3 minutes, team. So get up, grab a glass of water, and I'll be right back with Coach Becky to navigate Power Hour with the team. Oh, negative? No BRB. So I'm still live on YouTube saying no BRB. Okay. All right. No, be right back. We are going to continue. Hey, really quick, Becky, can you share screen today?
Sure.
Thank you. Thank you. In the future, Nick, can we plan on doing a be right back 3 minutes? Appreciate that.
Hey, welcome back. It's Power Hour. Thanks for hanging, guys. That was an excellent trader technical conversation with Coach Matt. And now I am here hanging out with you all. Cheers to an early Friday, right? Happy to hang
Who
out.
doesn't like an early Friday?
I know. It's a good time.
Do you like soccer, Becky?
Yes.
I'm not a big soccer guy. I am turning into a massive soccer guy after that US game yesterday. I was like, I don't even know what technically a red card is. I
Yeah.
grew up playing football, baseball, and basketball. I don't know what a red card is. And I saw the US guy, the star of the US team, get a red card, and I just started yelling at the ref. Just, how is that a red card?
Definitely not right. I don't know what's happening, but you're wrong.
Yeah, just big ups to the US football team. Big ups to their win yesterday. moving forward into the round of 16, I believe. First
Hey.
time since 2002. It wasn't a red card. I looked into red cards after that, Woj, and I'm like, that's the dumbest call I've ever seen. Take it with a grain of salt, but I was like, that was a play on the ball. That wasn't even that aggressive.
Okay, so don't judge me, but I missed the game. My best friend and I
Oh,
had
it was
tickets for a concert, and we
fascinating.
were driving in traffic to get to the concert at that time, and so we missed it. We had to catch the highlights when we got there, and wow.
It
It was
was
incredible.
honestly pretty fascinating, but now they're without their stud player for the next round against Belgium, and apparently Belgium's pretty good. Ranked, I believe, 8 or 9 in the world. US is ranked 17. But man, that US team's got some, they got something cooking right now. It's pretty fun to watch.
Yeah. Aw. I mean, it's exciting. Now we're into what is it, the 32nd round or whatever?
16. Round of 16 now.
Oh,
Yeah,
okay. So that was the big progression. That was a big deal.
yeah.
I do follow, but like I'm not as well as a lot of people do. And so I
That was
gotta
a missed opportunity, Jaja.
Okay, you guys gotta help me get in alignment because if I'm being very honest with you, we had a very good time at the concert and stayed up very late. So I am flat on the day and haven't traded yet, and I'm still trying to figure out
Oh,
what's
good.
going
I'm flat here too. Um, I would love to see a double bottom here or an
on.
increase in support. The on the ES right now, you got that low point of support right around the 81 level.
Okay, yeah.
And so I kind of feel like that 81 level is the level we need to anchor on here.
Mhm,
The 5-minute chart is a beautiful example of momentum shifts and a potential reversal. And the 15-minute chart did get above that 15-minute 9 EMA, but it was just a bearish retracement on the 15-minute chart. A double bottom here, I think would look pretty decent, honestly. So I think that 81 level is a pretty important level, but I also think right here where the market's at 92 is another important level.
mhm.
But like, I don't think you're in any degree of potential momentum shift until you get back up above 15. And if you get back above 15, you got a legitimate chance to go test VWAP before the end of the day, but a little choppy here right now.
Yeah, there was a bit of a sell came in. I'm trying to like zoom out and zoom back in because my levels are kind of jumbled up here a little bit. So we had 4 straight hours of deep selling after an initial push up this morning, and so then it just slid down pretty aggressively. And then this last hour saw some bullish action, and now as we're starting power hour, there's been some rejection here since we opened this session right now. So that'll be interesting. I see what you're seeing now. Like if this was a good attempt of the bulls in the last hour, and so now if we can come back down and hold, there could be a pop here.
Yeah, and that's how I see it as well. It's the best ever since the sell-off started happening right around 30 minutes after the market opened here today.
Mhm.
This is the best look the bulls have had.
Yeah.
And it's just a matter like on the daily charts, once again, that conversation, are you going to close towards the low on the daily chart? That's where we would be right now. Or are we going to fight back up into some degree of neutrality here today? Personally, I honestly think that we're just seeing this is my personal thought, my personal opinion on the price today. I think what we're really just seeing today is the ES. Like I said this earlier in the week, but the ES went from 7,400 to 7,600. 7,600 is a massive, 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 massive level of resistance. And so market achieved what it wanted to do. And I just personally feel like this is the market just alleviating some pressure going into a 3-day holiday weekend where they
Mhm.
just don't want to think about things. And so I don't see this today as a negative catalyst against the overall trends and patterns. I see it as market hit 7,600, started 7,400 this week, and then you started seeing profit taking, profit taking, profit taking. But I don't see this as like a catalyst day at all.
Right.
By the way, I don't think we've had a catalyst this week, quite frankly. The weekly chart is legitimately in the dead middle of its pattern right now.
Well, that's something that I was looking at too with this morning when I was like trying to come to life, is that there's a lot of like bracketing on top of each other. Like on the daily, this is NQ, like holy moly. Like this is a lot of just fake outs in both directions. Like a strong bullish start. Now we had a sell off. We're back at where we started this week at with the Sunday open that was pretty strong. And so a little bit of a bounce here. I mean, it would be surprising after this big candle today if we saw a sell to close and had a big aggressive momentum selling close based on the fact that this was a key support at the start of the week. So,
but you're also looking at the number one problem of the market too. Like the number one most negative area of the market is what you're looking at right now. Every single other area of the market looks infinitely better than what you're looking at right there on that daily chart.
What do you mean?
The Russell 2000 is kissing up against an all-time high with the slowing momentum pattern. The Dow Jones is seeing a little bit of bullish expansion. The ES weekly chart is in the middle of a high base. My point is the NASDAQ is the epicenter of the selling right now. It's not everything in the market. In fact, when you look at a heat map today, 80% of the market is actually up today. It's the NASDAQ that is the issue. It's the AI trade specifically that is the issue. And so, like, the ES looks really kind of fantastic on the weekly chart.
Yeah.
The Dow Jones looks downright froggy. Cyclical areas, and this is not the first time we've seen this song and dance in the last month and a half, but you are seeing a general rotation out of the AI trade into what I would refer to as the cyclical trade. And I don't feel that's a long-term thing. I feel like that's just Micron, the semiconductors, Lam Research, things that have just been pumping for 2 months now, finally starting a correction against their long-term charts. And so the selling pressure is honestly very, in terms of the broad market exposure, it's really relegated to the NASDAQ and specifically the AI trade right now.
Yeah, gold looks strong on the daily. Can I just say, like, this is pretty. This level we've been talking about, like, this is a good look for, like,
I like the double bottom of 4K.
yeah.
Like, I'm not there to open up the cover call yet, but I'm very close.
Intraday, I don't love it. I, like, zoomed in to see if I could see something on the 5-minute, but it's, like, choppy as all get out, midday today after an early pump. Like, it's literally just sideways since then. So this is not appealing to me.
No, I'm right there with you.
Okay. So
Although it's dollar's starting to show a little bit of relative weakness. That's a good thing. For the entire market, that's a good thing. The one area of the market that does not care about interest rate adjustments as much as the NASDAQ. They run on other growth metrics.
How do I feel about this long right now in ES? You see how it fell down hard into this 15-minute demand zone from this morning?
I think you could go right above 75.02 with the stop loss underneath 74.90 right now.
Right now at this pivot, right?
Yeah, I think you can play the pivot. I mean, it's not a pure trade. It's not. I'd call it a C to B setup, but I think that's what we're getting today in Power Hour, to be honest.
What? Okay.
A high quality setup would be an hour and a half left in the trading session if we're breaking out of the 15 level. That would be the continuation on the longer time frames to start adjusting back up. But I definitely think it's worthy of a stab. I just don't think it's I agree with Ace. I just don't think we're going to get a great trade here, probably.
Well, let's see. I think
B to C, however you describe it, I would say, Ace. But,
I like it. I feel like this was the strongest of the bull attempts. We came back down. This is the support of the morning here. I'm gonna take a little stab at this ES because it is a little bit stronger, as you said, and it came back down to a kind of a key level of support on the other time frames, and it's giving a little bit of momentum shift here. So if this is the potential pivot, which I really like the volume on this pivot candle here. So I think that this could be a potential to get some momentum under it. But I definitely could be wrong because I'm coming in kind of hot here, you guys.
I think you have an edge. Yeah, I did it with you. I think you have an edge, but I just don't love it.
Yeah. I don't.
Let's split the mid here. I'd give it a B minus. I'll give it a B minus.
All we'll trade small size on this B and we'll see what happens here. Nothing A for sure. I'm with you on that, Ace. I'm with you on that for sure. In Q is similar though. I mean, Jonathan had a good point about that level here around 48, which it didn't quite get down to there, but it did get down to this 15-minute support area, which is also very, very low from a couple days ago. We're right in the consolidation though. These days are kind of on top of each other. So these values matter a little bit less, but this is the potential support here as well. But NQ is weaker.
Listen, if the ES pops above 7,500 here, we're most likely getting another 10 points. Maybe max out 15 points. Unless momentum just happens out of nowhere.
Yeah. Well, I'm not going to overstay my welcome here, but I might just take a little stab. I'm flat on the day, and I got, let's see if this pivot can hold here. If it doesn't, then we've got another leg down. We could take out the low, which it has been bearish day today. So everyone trade at your own.
I think the most likely scenarios we're going to be somewhere between 74.80 and 75.15 by the end of the close.
75.
Meaning, I don't think we break the low, and I don't think we break the current high in the condition.
Yeah, view up is a very long ways away, considering we only have 45 minutes left. Like this is a massive range to view up. I don't think that's in play right now.
Yeah, and that's what I'm saying is like I think we can work back up to the highs there. Yeah, exactly. But I don't think we can. Don't get me wrong. I hope we get a little bit momentum going into it, but I kind of feel like half the market has already taken the vacation here.
I think that as well. I really think that as well. I think coming into holiday days is like not actually a really good look. And we're way below initial bounce. Holy moly. Initial bounce was small and high. Which means that this breakout would have been a really good hold for here when we broke down through this hourly, all this chop right here, and then we broke down like this, and then this retest here would have been a nice entry to follow the momentum down this morning. I wasn't available, but now here we are. We're down in the lows, so definitely the bear move is what the most of today has been. So a bullish move here is counter trend to the bigger time frame, but also momentum slowed up, and the bulls gave a good try here, and then we got a retracement. But we could have one more leg down on this retracement as well to actually make an official double bottom. Yeah, I'm not going to take on all this risk. I'm just going to do a 5-minute candle worth and put it right up underneath this one because it is a B setup, and I'm not going to give it the full pivot distance here. If it did another leg down and then held, that would be a better look. But then also that shows weakness, and so it could be a sign for the bears to have some energy. So I'm going to keep my wrist real tight on this attempt.
I agree with you. Another leg down with an official double bottom would be it, but
bottom's been dry.
We have the time to do that.
Yeah. I like a counter trend move, a little scalp, like not aiming for shooting for the moon when you're having a directional day where momentum eases up at the end. But the trick is catching at the right point. Like this could be the pivot point, or it could do one more leg down and give a pivot here for a little pop. And so which
one of those two?
Yeah. Whether long or short, that's
it's one of those two. I just kind of feel if you're waiting on the lower pivot point, you're just not going to get a trade today.
Yeah. I agree because the timing is like not there. In which case, like right now, it could be.
Which the double bottom reversal is the A setup.
Yeah,
this is
not it.
The meandering.
Wow.
Grading on a curve B minus.
Yeah. Let's see. Q is going down here. Oh, it's a little hit. I wonder about taking this nest leg down. NQ being the weaker one, I might kind of be interested to see if we can take out this liquidity. $480, 4-hour key level rejected earlier. This rejection here, yeah, right around 500 between 480 and 520 area here. Bring up the inner bears, yeah. And see, that's the thing is that I missed the whole move. Not trading today. It's like I don't have a large investment in any of it because pre-holiday volatility is not my favorite. I like to trade market open because like the moves happen. Like they happen or they don't happen. This like wonking around business is not my favorite.
No, it's again, I think half the market's already gone.
Yeah. In which case, it's just a little
I
algo.
think Wall Street's already hedged and coming into the weekend. Like
Yeah.
they're like, catch the plane, catch the flight. Let's get out of here.
What up, RQ? How's it going? Jonathan sees the bears for this next leg down. Yeah. See that. Thanks for coming back. Live streams are fun.
200-point dumper.
Sink it. We got some bears in the house today.
Man, you greedy bears. You've already got 3% in the NASDAQ. You want another 2? You want to limit down this bad boy on a Friday going into, like, what are we talking about? You guys want a limit down day going into July 4th, celebrating the 250th anniversary of this great nation? You want to limit down that? You want every trader and investor coming into the holiday weekend being like, oh my goodness, did you see the market get shut down in the last 30 minutes because of the volatility? Woo!
Like you're talking to me.
You guys are crazy if you want to be thinking about that all weekend long. Crazy.
All right, I did it. Fine. You talking me into it.
Like RQ is like, short America, 250. Let's go.
All right. Let's do it.
Well, the auto bid is at 7,400, John. 7380 to 7,400 is the auto bid.
Let's see what she's got.
I'm telling you, 7,500 is the dead middle of the weekly pattern. Dead middle. Like split the mid, Luke Skywalker nailing the shot into the Death Star, dead middle, 7,500.
Let's see if we can take out this liquidity at the bottom here. If it really gets below this.
Did you hit reverse?
My long was stopped out, and so I switched to NQ, and now I'm in the short because you talked me into shorting Merca. Yeah, Jonathan's in it.
I'm still in the long.
Okay. No, I got taken out.
But I'm in the ES. I'm not on the NQ.
Let's see.
So I'm staring at nothing for 15 straight minutes.
No, I kept it really tight on my stop because I don't know. I see the bears. It's just been a bearish day, like that is the read. And so this was a counter trend move, and either it was going to happen or it wasn't going to happen. That's kind of what I was thinking.
Yeah, you can definitely get to that low point very easily.
Yeah.
Becky could legitimately get to that low point, find a pivot there, and me still not get stopped out on the ES. That's how negative the NASDAQ is against the entire market right now.
Yeah. Let's see what she does.
Now, don't get me wrong. I do not like my ES trade with the NASDAQ selling off.
It's not going to help.
It's just not doing the same thing right now. It's just kind of trying its best to hold firm.
Take out the bottom of the screen. There we go.
If you take out the bottom of the screen, I'm definitely getting stopped out.
Let's see what she does. Let's see, 330, 29, 330, 331 is this pivot down here. Better put my stop loss on this sucker. Okay, some kind of weird thing comes out. I'm just gonna go right above this 5. Like again, is like I'm not trying to be a hero here and take all kind of risk at the end of the day. But I'm in favor of this short.
Can't believe all this short American stuff there, RQ.
Well, cheers to America tomorrow. Maybe we can.
I'm going to the store right now, and I am buying me an Uncle Sam hat, and I'm going to wear around that for the next 3 days. I'm wearing the Uncle Sam hat.
We should have dressed up. We should. Why am I wearing a mauve shirt? This is the wrong thing.
I'll complain about our flaws as America next week, but for this weekend, it is all red, white, and blue this weekend, baby.
I failed. I need some All right, I do have a red blanket. See, I got some. I don't have a red. I should plan better. I do
Don't
have.
turn against me. It's driving me crazy.
Let's see what she's got. Let's see what she's got.
I mean, why stop at 150, RQ? If you're gonna hate on America, you might as well just say, let's get to 28. 28. Let's go. Oh no, I get it. I listen. If I was on your end, I'd be like short of 2. Get it out. Rip the band-aid off.
Let's see. Take her down. Take her down. We'll see. Sometimes there's liquidity at those pivots, and the bulls could not hold it on this on the NQ at least.
I tell you, the last 20 minutes on this ES trade has been a snooze fest.
Yeah.
I'm at this point. I'm like, just stop me out so I can hit the flip and maybe join you on that next break.
Yeah. See, that's what's up.
Actually, I would not hate it if you got stopped out here, darling.
Oh, come on.
I don't want to put that nonsense out there into the world. I don't cheer against anybody.
We're winning this.
I hope you get your trigger at the low without the ES hitting my stop. And now, mind you, I have approximately 3 points on my stop. So we'll see. We'll see.
333.
But there is a scenario where you do make money, and then when the NASDAQ retraces back up, I get my trigger up at the 75.10 level on the ES.
True story.
Like, I'm not asking for a lot. I'm asking for 15 points here. The biggest part of that is getting above 7,500. Like, you get above 7,500, we are getting that 10 points. So,
well, she just is doing some funny business right now.
She's dancing. She's dancing.
She's dancing.
She's dancing.
What's she doing, Mama?
The ES, if it was the dance, would be a 2-step when I was an 8th grader in junior high.
Come on.
Not exactly sexy.
Well, no one is at that time. Let's be real.
Yeah, but there's other people that take it to a new level. I took the 2-step to a different level. Let's just say that.
Okay, we need some video of this.
It ain't good.
All right, come on, shorts. Show us your moves. Take out the lows. You know you want to.
All right, team. While we're waiting on whether Becky gets her trade or I get my trade, I do have a question. What is your favorite thing about July 4th holiday? Is it the parades? Is it the fireworks? Is it the patriotism and the love of all things America? Blowing jaw. That's what we do as America. We blow stuff up. That's right. Is it just going up there and blowing up some stuff with some rockets? What's your favorite part of the holidays?
I think the blowing stuff up is fun, but I think the camaraderie, I think a lot of people, whether you have thoughts about things that are happening within America or you feel some kind of other way, I think that everyone can find a lot of things that they love. And so there's a lot of positivity around our country around that.
What's wrong with dancing historical movies? What? I'm gonna watch Saving Private Ryan tonight, Jaw, just for that. In fact, I'm gonna go watch Platoon. I'm gonna watch all of them. I'm gonna go Platoon. I'm trying to think of that other one from the 1980s that was amazing. Full Metal Jacket. I'm gonna do that one. I'm gonna do all the World War II ones. I'm gonna do all of them.
Yes.
Although I am a sucker for Saving Private Ryan. I think that's a fantastic movie.
I haven't seen that one in a long time. All right, the stop did not, the short did not work, and I took the stop out.
My long's working.
Yeah, it is.
All you guys cheering against me. See what happens. Remember that next time, guys. Remember that next time.
Don't short Marathon the day before our birthday.
You don't, especially coming into the close when I'm talking about being a patriot.
Okay, fine. Let's cheer for Matt.
I better not talk much. I'm up 2 points. I better not stand tall yet.
You know what? You're still in and you're in the right direction, it appears. So get it.
View on SanDisk, Krishna. I have SanDisk in a correction after slowing momentum. For me, it's a stay away until we see a correction and a pivot. Those memory chips need to slow down. They need a correction. They just do. The semiconductor equipment companies, Lam Research, Applied Materials, ASML, the memory chips and their counterparts, SanDisk, Micron, WDC, Seagate, they all need a pullback on the weekly chart, i.e. a correction on the daily chart. That's my read. Get ready for a correction and then make a decision after the correction is what I would say. Plus, we got earnings season coming up, by the way.
Ooh, when does that start? When are we kickstarting?
You're not going to want to know. Next week.
Already?
Yeah, we start getting early reports next week. Now it's not going to be like 100 reports. Like it's just relatively few for the first couple of weeks, but right when the quarter ends and we get into July, July's the kickstart of the reporting season.
Okay.
Banks, healthcare, regional banks, Taiwan Semiconductor, ASML, Netflix. Those are your JP Morgan, Goldman Sachs, Bank of America. Those types of names over the next 2 weeks. Yeah, Krishna is asking the real questions, Jaja. Like what to do about the memory pullback. Be patient. Overextended, overvalued, slowing momentum, all of it leads to a correction.
All right, now let's go Team Bulls. Come on.
Because she went against America and she went against Coach Matt, RQ.
The market held it up. I know. Are you still holding yours, RQ? I'm not trying to take a lot of risk. I did not do my full process today, and I really try to mind my manners and my P's and Q's when I am not like fully prepped and have my levels dialed in. And so I came in a little bit hot to the live stream today, and so I'm sized down and I'm keeping my wrists tight. So I support winning trades though. So I hope that everyone makes some nice money here. And Matt is printing on his long on this ES trade. So
I'm a snail's pace crawling towards the printing machine is what I am. RQ held one microni. Is that what one microni? Is that a micron 5 contract hold? Oh, yeah, that's a good one. Lone Survivor, Dan. That's a good one. The 112 strong, which tells the first interaction within Afghanistan, is also a really, really good one as well.
My crony. I like it.
I think I'm more of a sucker for World War II than I am World War I movies. 17 is okay. Like I never got that enthralled with Quiet on the Western Front and 1917. They're both good. Like I don't have a negative thing to say about them. I just didn't get into them the same way like some of the stories about Middle Eastern conflicts in the 90s and early 2000s. I'm a big sucker for World War II. That was one of my emphases in college when I was a history guy, was World War II analysis. Ace, A Few Good Men, is why I wanted to be a lawyer when I was 13 years old.
Yeah, that makes sense.
It's why I went to law school. A Few Good Men. Yes. So maybe I can blame Tom Cruise for the debt explosion I took to go to law school.
Send him a bill.
Yeah, we'll see if Tom responds.
Yeah, good job. I like that long. 480, I think, is very much in play. The base of this consolidation. I was looking at that too on NQ. You guys, as you know, in my psychology energy right now, I'm trying not to throw on another contract, but I actually really like this long. And so 480 is coming very fast. And then I wonder if we can't take off this tip here on this last area for to end with the strong energy here. That would be great. I'll put this 480 level on here because it is a good one. I like how it's the base of all of these candle closures here in the bottoms of it. So that would be an area that I think we're creeping to solid on NQ. I love that read, Jonathan. It's beautiful.
That is right where I put my stop loss, right underneath the low of last candle.
Yeah. Beautiful.
That's my break-even price, by the way. So I have trailed the break-even.
Love it. Great job. Matt handled it.
Like a boss.
Like a boss.
Although it was boring me to death.
I took this stop out on ES right underneath, right basically at the low. I just took it right underneath here. Like I got in and I had said super snug to tight. Had I left it at the pivot, it would have held. But I really was tight with my risk management today, which I think is a choice. You know, like you have to gauge your situation. And in my normal situation, I give it more room. But I just recognize that I am short skirting my process a little bit, and you know, so I'm gonna be careful.
Well, in the ES, this is ball game here. Whether or not we're getting a pump or not, we're at the level. We're at 10. The level goes from 10 to 15. Like this is where the ES is either going to give us a really good trade on the top side. And congratulations on whoever held that ES with me, because Becky did not go with me on that one.
Did not.
But this is where the ball game happens here. Are we going to get some pump here? Are we going to start working towards VWAP, or is it going to flatten out here again? Right now, it does suggest we're flattening out.
Well, if you want to, this is a good move here. We're in a little resistance, but it could want to take out this high here.
Ace, do you know how Dan said lone survivor? I was the lone survivor on the long trade.
Jonathan's in long with you. He's on NQ. When the short didn't work out.
After he flipped, he's like, I'm jumping on with Becky first. I'm like, oh, okay. Okay, I see how it is. I see how it is.
Oh, yeah. Zero DTEs at this stage of the game are like struggling. Are we close to imbalances? No, we still got 13 minutes.
Oh, vodka. I was over my first two. I was trying to front run that reversal before we got into the stream. And I took a 3-point stop loss on the ES and I took a 5-point stop loss on the ES. And this was my third attempt. So basically, I'm back to even on the day. I haven't done a lot of trading on the day trading side of it today. And when I did start, it's been a neutral fest, basically. But I like, if this one works out, I walk away happy.
Let's go.
Unlike anybody in Lone Survivor. That was a sad show.
NQ did a pullback here, but she appears to be holding.
Such a good movie, by the way, Lone Survivor. I'm sorry, I'm just in movie mode as we're watching this play out, guys.
Yeah, you guys are giving me FOMO. Like I feel like I need a movie in my life right now. Let's see if we can't on this NQ trade tag this for
21.
You, and then take out this high.
Okay, I see you at 21. Yeah. Okay.
Yeah,
I'm gonna stick with you.
Go.
Sticking with you to 21.
Go. I like the 20 range on ES.
Yeah, I do too.
Yeah.
There's a lot of support consolidation on the 5-minute over there.
Yeah, it's climbing to it.
That's if we get above 15, though. Like, well, not 15. Yeah, wicks are 15. Bodies are at 13, but got to navigate this resistance before we get to the next one. So I don't want to start counting money there, you know?
Yeah. Yeah, time is a factor.
Oh, now we're doing rocket ships, huh? So we were going to sink it. and now we're doing rocket ships. This is the day trader 101 mentality, by the way.
Oh, come on.
Flip
If this
it
is
when
working,
you
I'm gonna
need
flip.
it. I love it.
Why not? Maybe we probably should have done rockets all day because it didn't work.
Rockets, flags, fireworks, all of it works. Ducks, red. What is that even?
What? I don't know. That's a snail. Is that a snail?
Snell? Oh, you're blowing oh, that's a snail blowing the bear. Okay. Gotcha.
Do it. This could be a rejection here, right underneath that 480 level on NQ.
By the way, I adjusted stop again. I'm not giving this anything more than 5 points of range here, by the way. Like,
yeah,
I don't have confidence in it, so. If we had an hour left in it, I would be full on port bowl vodka. Like, I would love. I thought this was reversing. I have a massive opinion at 7,500. It's been a prolonged 5-minute reversal, which means the 15-minute chart starting to look a lot healthier here. 15-minute chart looks like it wants to see some bullish continuation analysis. Hourly chart, you go out to a longer term, wants to test up to 74.25. Yeah, like if we got more time, I like it a lot more. I just my only hesitation on that is just shortened weekend coming into the close, got about 20 minutes left and meandering here. You know.
Yeah. That's funny. My oldest watched Rocky just the other day.
Dan,
Apollo.
I have never, ever, 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 ever in my life understood one simple thing. Why there's even an argument that Die Hard isn't a Christmas movie. Like, I don't understand this. I don't understand the mentality of taking an amazing Christmas movie like Die Hard and trying to downgrade it. Like that doesn't make sense to me. Like half the movie is about Christmas themes. It's ridiculous. Like people hating on Die Hard. Who are we? Like we're Americans. We should love Die Hard as a Christmas movie. Like the family gets together and everything. They're singing Kumbaya. They're having a party, having a few laughs. Yeah. Good movie.
It's a good point.
And it's absolutely a Christmas movie.
You tell them.
It's historical. It's not me. It's like that's in the historical narrative. In fact, I would say it's top 5 Christmas movie.
We need variety in Christmas movies anyway. Like it offers a different flavor. Like
not all Christmas movies have to have Rudolph in them.
I watch Bad Moms Christmas every year. I don't know if that resonates with this crew that's on right now, but it's very funny. And
it did not resonate with me.
I get that.
I just haven't seen it. I know which one you're talking about. It's a comedy, right? Dark comedy.
Very funny.
Yeah, I've heard it's actually
very
really funny.
R-rated.
I just haven't seen it.
Very R-rated, but it's amazing and it brings life to the season for me. Saying.
Yeah, and when we hit December, we're all going to watch Die Hard to get into the Christmas seasonality as well.
Yeah.
They have Halloween out already.
Oh, I saw that at the grocery
store every holiday.
There was candy corn on the shelf at my grocery store yesterday, and I was like, I literally did a double take. I'm like, what is that? It's almost Independence Day. I'm sorry. Nope.
We don't do candy corn on July 4th. Like,
what's happening?
First of all, you shouldn't do candy corn in October or November or December or any month.
It's not great.
But definitely not on July 4th. No. Get some apple pie.
I've never seen it this soon. No, it was wild. Yeah.
Team, yay or nay on the candy corn? I'm a definite nay on that.
Yeah.
If it's red, white, and blue, I can make an argument. But orange and white, you can't make an argument for that.
It's definitely orange and white. I'm telling you, full on Halloween.
It's ridiculous.
Yeah.
Absolutely ridiculous behavior.
It is licorice season. That is that for me, that's the candy of Independence Day. I don't know if everyone else feels that way, but red vines, right?
Yeah, I'm a sucker for licorice.
This is red vine holiday in my mind. I mean, there's other things. You can get red wine blue M&Ms, I think, right now. Like
Ooh, ES getting
watermelon.
testy here. Testing above bodies here on that resistance level. We might max out another 8 points here.
It's helping. NQ it did a wick here, but couldn't break lower either. This is a good look
Ooh.
on NQ and ES. They're both doing this double bottom business. I should have hung with you, man. Why am I? See, when I know I'm like coming in, I just need to listen. I just need to be a good listener. Wah, wah. Cheers to all the bulls right now.
Oh, yeah, cheers to the Bulls. If we can break this, definitely cheers.
Mhm.
I don't know if you guys have ever seen it, another World War II movie. Um, Tom Hanks in Greyhound on Apple TV was actually pretty good.
Hmm.
I wouldn't put it up there with the greats by no means. Like Tom Hanks in Saving Private Ryan is legitimately one of the best ever. But I did think Greyhound was pretty good. U-571 is another good one. I'm a sucker for a submarine movie too. Yeah, like Hunter Killer. I'll watch that thing. I'll probably end up watching Hunter Killer 100 times. Like, I love that movie. Matthew McConaughey in U-571 was fantastic.
So 715 or 515 is the level we're targeting to break out this high on ES.
Yeah, it's just got a little choppy range there from like 11 to 15, so we're kind of in that zone right now.
Yeah, NQ is resisting here too, but not
It's
falling necessarily.
no, does the market want to test up a little bit and get closer to VWAP? I did trail again, by the way. I'm just hugging that 5-minute 9 EMA here.
Mm-hmm.
RQ, are you still in that short?
He's been in it for all day. It's profitable.
Are you trading the hourly chart here? Or it's just like I had a great day and I'm willing to give back a little to
That's his
get that
runner.
up coming into the close or that sell off. Oh, probably a runner.
Yeah,
Probably
try a runner.
a
So
runner.
then you give it, you close it. Okay. Nice.
Oh, that's what I was wondering. I was like, are you gonna okay. And that makes more sense. So you're just hating on our trade. Oh, that's a violation of rules there. You're flat. You can't hate on the trade.
break it. Let's go. Pop the top.
Dan, I was thinking Unbroken as well, but I couldn't remember the name off the top of my head. But it is a really, really good movie as well. So if the Bulls make a move here, then it confirms that you getting out of the trade was the legitimate right choice, correct? Which means you might not have closed early. You had a great trade though, brother. Well done.
Mhm. Yeah, beautiful. Yeah,
If we're gonna get it, imbalances are gonna do it.
Yeah, it's getting closer. It's just really sideways right here. NQ even is whereas ES we just had up on screen, NQ is really showing a little bit more weakness under that resistance here, which has kind of been the name of the day with it. But it's doing a little bit of a flag here, and all these wicks on the bottom, it looks like a bull flag, so we potentially could get the pop up into this resistance on NQ as well. And ES is kind of pulling the heavy weight here by pushing stronger. So we'll see if we can get a little bit of more of a bullish continuation here. But there might be a wick situation with imbalances.
Yeah, I'm gonna hold through imbalances, but more because I just have a partial had a really good entry, so
Mhm.
I'm just giving up gains here if I don't get the move.
Yeah.
But I completely understand that Gabber on the zero DTE side of it because they will legitimately chop up those premiums. Dan, I don't. I usually get done with the market when the market gets done. And then I usually come back around for the Asian session. Unless the only time I won't do that is if like there's a key earnings report. And if there's a key earnings report, like one of the major catalyst type earnings reports, and then I think it's more important to stick around.
Huh.
But typically when I hear that toss ding ding, I like that's like Flintstone getting the bell. Like I'm done.
Yeah. Sometimes I will hold, like if the trade is like almost to my TP and there's still a little bit of momentum, I'll give it a few minutes, but
Yeah.
I won't give the chart or trading any more real energy after that because it really starts to fry pretty quick after that.
Oh, there we go. There we go. There we go.
Oh, she popped. Go, Sunday.
All right. All right. All right. We ain't getting this any time to fake out here.
Go, take out the top.
Send it.
Top.
Send it. You just gave us one. Yabba dabba do. No, because you'll cut it and then put it on Twitter and I'll look like an idiot.
No.
I know. That's why we should cut you doing it and then just put it in an AI little platform and act like I'm doing it. There you go.
Yeah, the back
Oh,
end.
they can't hear Nick.
No.
They didn't hear the yabba dabba do that Nick just screamed into the microphone.
No.
Oh my goodness, you guys missed out. Nick is in there screaming in my ear, talking about yabba dabba doing this bad boy. And I think that might be a new calling card for the bull trade. Every time we make a bull trade on a breakout, everybody's got to yell yabba dabba do.
You boys get it. Go. Cheers.
All right. All right. The Bulls came through for us coming into the close, team.
Yeah.
We didn't get the momentum pump here, but we got enough. Well done, Bulls.
This is beautiful.
Well done.
It took out on the top on ES. NQ did not quite take out the top. It looks like it got right on it.
Yeah, I got a 2-point stop loss here. You can fall through the bottom all day long here, and I'd be perfectly fine there, RQ. And I would not even call it cheering against me. I would not hold you accountable for cheering against me. I don't like your chances, but I wouldn't hold you accountable for cheering against.
I like it. Let's go. I kind of want NQ to take out that top of 527. Blow through her. Blow through her. Beautiful bull move here. The bounces really helped. That's great.
Team, if you've enjoyed Power Hour, the conversation, the back and forth, the camaraderie, the breakdowns, the technicals, the trades, go ahead and hit that like and let us know in the chat. Little positive affirmation lets us know you guys enjoy the show, and we're going to continue to do it. Not the show. We're going to continue to do the show.
I mean, we are. Yeah. You're stuck with us.
Okay.
And keep coming back because it's fun.
At the 20 level. Nick, you better say you enjoyed it. You just yabba dabba do it in my ear.
Cheers to that.
I just kind of want to hit this. Come on, just go up like another 5 points. Let's go triple digit. That's
There's definitely behind it. Thanks, Dan. What is up?
Nacho. What's up, buddy?
Nacho. We got a good crew in the house today.
Got the old school crew here.
I love it. Vodka, Nacho, Ace, Jaja, Gabber. You.
That's a good call out, Vodka. Watch The Patriot to understand where we came from. Watch Idiocracy to understand where we're going.
Idiocracy, man. There are so many parallels to reality. It stresses me out.
I was going to say not where we're going, where we're currently at.
Oh,
yeah.
That movie was ahead of its time. It was on point. Like the creators of that, like
movie too. Oh, such a funny movie.
It's very quotable.
Yeah, Gamma, I'll be fine with 5, 10, 15, 30. Like, but to me, it's just a matter of, okay, when do I close this trade?
Yeah, let's switch to ES. That NQ is going to take it out here. Mm. They're definitely coming into the midday consolidation over here. There's AS. NQ just took out the top of that pivot. Let's go. Yeah.
This thing wants to attack. Does it want to attack VWAP before we're done here? Is that
I mean,
like
9 could be. I mean, it's pumping. Go.
hence the slowing momentum reversal conversation played out, team? Well done.
Hey. Good job. Good job.
It might, and that's kind of like, I just want to kind of keep it until we see that.
Yeah, dude. Ride it.
Like, I could legitimately close this thing at any second because you're at target and you're extended slightly from the 9, but like it just tick, 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 tick,
Just
tick,
trail that
tick
sucker.
up. Like,
Ride it.
picking up.
Take it for all of us. Or hold it, guys. Hold it for me.
I gave it so much room for you, Becky, that I am right underneath the candle low on my stop. I'm above the 9 EMA for the first time on my stop loss.
Okay.
And I am now right officially underneath the low of the candle.
Yeah, this big bullish engulfing. Yeah.
You got 5 minutes left. This last candle, you start pulling back. Done.
Yeah, I love that. This is excellent. You guys know that country song, I'm not as good as I once was, but I'm good once. What the heck is that song? I'm good once.
Wasn't that Toby Keith?
Yes. You're good for one, but not as good as I once was.
Yeah, that was Toby Keith, right?
I know, but what's the line in it?
As I ever was.
Yeah.
It's a good song. He's a great one to play on July 4th, too. That man, all he thinks about is patriotism in his songs.
I'm trying to get the actual line. Maybe help me out. I ain't as good as I once was, but I got a few years in me now. No. I ain't as good as I once was, but I'm as good once as I ever was. That's the sign. Okay. That's how I feel last night at the concert. So I'm a little bit sluggish this morning. Okay, got it to 29. That's great. This was the key target for me on ES as well here.
And I honestly, I'm gonna stick it.
Do it.
I'm so close to pulling the trigger and getting out, but it just feels like there's a magnet up around VWAP.
Yeah, I love that. I love that for you. Hold it, boys. Hold it.
Should have been a cowboy. That's a good song too, Dan.
There's a lot of good songs.
All right.
Go.
We're out. We're flat. We're good.
Hey, locked it in.
Paired like a boss.
Excellent. I love this song for everyone. I feel good about it. I'm not gonna lie.
No, RQ. That would have been nasty if you held against that.
Yeah, this was a sign here.
Especially the last 10 minutes after imbalances. Imbalances were just really strong. And by the way, I did close. I still think we might hit VWAP in the next minute.
It's pumping to it fast right now. We're like almost on it. Depending on which chart you're at, it's like there. You know, if you have overnight on, if you have overnight off, like it skews the number just a little bit, but like, yeah, with overnight off, it's on VWAP right now. With overnight on, that's this chart. So it's a little bit ahead of it. So she's like there though. This is an excellent hold, you guys. Bulls for the pre-Independence Day celebration.
Listen, the Bulls were not going to let the Bears short America coming into the close. I don't understand how everybody did not understand this really simple equation today.
I feel like I had to go.
I get a little bit.
The I don't know the I don't know the variability of like. Of course, you can't short America right now, but like I don't know, maybe
Can't short America right now. No. Like the day before we all start celebrating the 250th birthday, you can't short America that day.
Yeah. Okay.
Kidding. The best trade of the day was the short after the reversal at the cash open.
I love your exit right here. Oh.
All right, team. Becky, that was fun hanging out in Power here today. I hope everybody else enjoyed it as well. Team, been wonderful hanging out all week long. That's going to be it for us for Power Hour and Coach Becky and myself this week, as obviously tomorrow we will not be here. But team, it's been a wonderful time hanging out this week with Becky's Lab, Psych Lab on Tuesday, Technical Lab today, Power Hour throughout the week. Becky and I will be back same time, same channel next week to be the caboose of the BluSky TV on YouTube. If you love BluSky, hit the like and share. Hit the website if you're looking for an evaluation. With that said, I hope everybody truly has a wonderful, wonderful, wonderful July 4th. Big up 250 birthday to the greatest country in the history of mankind, the United States of America. And with that said, I'll let Becky have some final thoughts there. Becky, send us out.
I cannot even agree with everything you said, even more. So enjoy the long weekend, you guys. Absolutely celebrate, do what brings you joy, and stay profitable. And let's keep building the life of our dreams.